So we are going to discuss on common test question on October 2018, question 2.
Question 2a. Explain the characteristic of intangible assets. First, identifiable, which is the intangible asset is identifiable when it can be separated from the entity. Second, control of resources. Entity can control an asset if the entity has the power to obtain the future economic benefits and restrict the access of others to those benefits. Question 2b. On 1 July 2015, World Chain Sdn Bhd acquired a franchise at a cost of 500,000. The franchise had an indefinite useful life. On 1 July 2017, the fair value of the franchise was 515,000 and identified that the economic life has been limited to only 9 years. Intangible asset is measured using revaluation model. Question: explain the accounting treatment for the franchise on the year ended 30 June 2016 and 30 June 2018. For the year ended 30 June 2016, the franchise will be recognized as intangible asset at cost 500,000 with no amortization as it have indefinite useful life. For the year ended 30 June 2018, the franchise will write down at fair value cost, which is 450,000 with deficit of 50,000 by 500,000 minus 450,000 on 1 July 2017. Since there is useful life of 9 years, there will be amortization of 50,000, which is 450,000 divided over 9 years. Second question, show the journal entries to record the transaction for the year ended 30 June 2018. First, the journal entry is debit statement of profit or loss deficit by 50,000 and credit franchise by 50,000. Second journal entry is debit statement of profit or loss amortization by 50,000 and credit accumulated amortization by 50,000.
Okay, Assalamualaikum. So my name is Irdina Iwani BINTI FAIZAL. So we are going to do question 2C. So let's read the question first. On 1 January 2017, Pharma Beauty Berhad invest 300,000 in research and development to invent new cream product for skin. The cost is to search for the new alternative product available in the market. The company invests more from July 2017 to December 2017 by 100,000, but only in January 2018 the new product was success to be developed. The further cost incurred for the development was 500,000 for the pilot sample, which received good feedback. The company registering the patent by March 2018 at the cost of 120,000. The company financial year ends on 31 March every year. So the question asks us to recognize intangible asset as at 31 March 2018. So we have two intangible assets, which are development costs at the amount of 500,000, patent 120,000, and the total for these two is 620,000. Okay, so the last question asks us to prepare statement of profit or loss SOFPL and statement of financial position SOFP as at 31 March 2017 and 2018. Since the research cost is not intangible asset, so we need to expense off to SOFPL. So in the statement profit or loss, we have research cost under the expense. So on 31st March 2017, the amount of research cost is 300,000, and for the 31st March 2018, the amount of research cost is 100,000. Okay, next we have to prepare statement of financial position as at 31 March 2017 and 2018. So we have non-current asset. We have two items under this non-current asset, which are development cost and patent. On 31st March 2017, there is no balance for development cost and patent. But on 31st March 2018, we have the balance on development cost at 500,000 and the amount of veteran is 120,000. So that's all from me. Thank you.